Hey everybody, morning. See, we got Diane, Ivan, Arturo, Rob, Kevin, Dan, Jim, Spinborn, Will, Serge, Andrew, Cliff, Mad, General Rush. Good to see you, sir. Ted, Mary. How's everybody doing? How's everybody doing? And dun, dun, dun. Let's do a poll really quick. Start the poll. There you go. Green day or red day? Let's take a vote. And welcome everybody. So, let's be honest. You've probably been scrolling through endless cat videos or maybe a heated debate with a stranger on the internet about whether a hot dog is a sandwich and or maybe a taco is a sandwich. I don't know. Like, are they? Are they not? And you've done a lot of that without a second thought. You've looked through social media, you looked through videos, you watch this stuff, you tap, you swipe, you stream. All this magic just happens. Like, the internet has gotten pretty good compared to where it was back in the 90s. But have you ever stopped to think about how all that magic actually happens, how it comes to your digital devices and, you know, makes it from the cloud to you? This fluffy cloud in the sky, as some politicians might call it. But no, it's not that fluffy cloud in the sky. It's all real. It's actually hot, expensive equipment. Um, needs cooling because it's so hot. It's a place that currently there's $500 billion being built potentially this year. That could be a gold rush. The best part, you don't even have to get your hands dirty to potentially get a piece of all this action. Welcome, my friends, to the world of data centers. And we're going to specifically talk more about these AI data centers and how they're being built this year and the coming years, really. The invisible factories of the 21st century. Today, we're going to talk about how you, the savvy investors, well, you might be able to get a piece of all this boom before it really takes off. I mean, there's been a lot of hype, but where is the actual equipment being purchased from and being installed from, and who's actually supplying all that? So let's face it, the world is a ridiculous place. We might as well have a little fun, make some money. So think of it like this. Maybe it's 1849. Gold just been discovered in California. Everybody's rushing west, grabbing their wagons, dreaming of striking it rich. But here's the thing about gold rushes. Most people who actually got rich weren't the ones panning for the gold. They were the ones building general stores, selling picks, selling shovels, selling food, selling blue jeans, opening the bars, selling the booze, providing other services, if you will. Fast forward to 2025, the new gold is AI. That's where the boom is. That's where everybody's rushing to, right? Everyone from your tech bro cousin or in-law to your grandma who just figured out how to use emojis for the first time. They're all talking about it, rushing to try to invest or use, or AI's just become like, it's not really a thing. It's just it's built into everything lately. It's kind of like the internet was shoehorned into everything. And it's kind of promising to cure all the diseases, solve world hunger, probably even make your coffee in the morning. But here's the secret. The real money isn't this thing we keep calling AI itself. It's the picks and shovels plays. It's the boring, the not so sexy, the incredibly profitable business of building the infrastructure that makes all of this magic happen. It's in the data centers, but who supplies the data centers, right? So what exactly are these data centers? What do they, what does it take to build one? Imagine a giant windowless warehouse the size of a lot of football fields put together, filled with rows and rows of humming, blinking computer servers. These servers are the brains of the internet, the place where your cat videos live, your online shopping carts live, your questionable search history lives, and they're all power hungry beasts. A single data center can consume as much electricity as a small city. And the AI boom, well, we're building these things at a pace that maybe makes some ancient Egyptians blush. I mean, we're talking about 500 billion just in 2025, and it's growing at a staggering 23% a year. It's like the entire economy of some of the smallest countries out there being poured into building these digital factories. And the cost of building things keeps going up, up and up and up. A traditional data center costs about $39 million per megawatt of power that they're going to use. But the next generation AI data centers, a cool $52 million per megawatt. That's about a 33% price hike just to keep up with the insatiable demand of AI. So who are the lucky ones out there selling the picks and shovels? They're not household names that you might know and think of. We're not talking about Google, Amazon. We're not talking about those kind of companies in our gold mining story here for AI. We're talking about companies that make the guts of the data center, the companies that provide the power, the cooling, the wiring, the racks, the boring stuff, but you got to have it. Let's talk about a few of these shovel sellers. First up, we have Schneider Electric. Think of them as the ones selling the electrical grid to our gold rush town. They make switchgear, power distribution units, all the other electrical guts that keep these data centers working, running, keep them from catching fire. And how are they doing? Well, their stock's up 16% this year. That's not too shabby for a company that most people probably never heard of. Then there's Vertiv. These guys, they're air conditioning salesmen of the data center world. But we're not talking about a window unit. We're not talking about a unit out back. We're talking about massive industrial strength cooling systems that keep all these servers from melting into a pile of silicone goo as we query for the next cat video. And then we have these AI chips that run hotter than a habanero, demanding cooling. The demand for Vertiv's products is crazy right now. Their stock is actually up a whopping 34% this year. You see the pattern starting to form here. And let's not forget Invent Electric. These guys are specialists. These guys are the ones selling high-tech liquid cooling solutions that the new AI data centers desperately need. Think of them as the guys selling the diamond tip drill bits to the most ambitious miners going deep in the mountain. Their stock has soared over 40% this year. It's almost like selling picks and shovels is a good business to be in. I mean, who would have thought this, right? And it's not just about the components, though. Someone has to own the land. Someone has to build the saloons. Somebody has to provide the labor, right? In the data center world, these are co-location companies, data center real estate investment trusts, but they haven't been performing super great this year. These are companies that build data centers and then lease out the space to these big tech companies. They're the landlords of the digital world, but overall, they've not been doing super great. Now, their customers are Google, Amazon, Microsoft. As you can imagine, being the landlord can be a pretty sweet gig. Now, before we go and mortgage your house and buy stock in a company that makes coolant distribution units, let's talk about some risks, because every gold rush has its fair share of busts. The AI boom is probably going to turn out to be a bubble. All of this talk about trillion-dollar investments in AI curing cancer, Sounds great, but what if it doesn't pan out in a timely manner? What if we're just building a bunch of expensive, very hot warehouses that, kind of like all the fiber we laid in the late 90s and early 2000s that still lay in dark? There's a great article from Business Insider that points out a tiny, insignificant 800 billion gap between what companies are spending. It's just tiny, insignificant. 800 billion gap between what's being spent on AI infrastructure and what they can realistically right now expect to make selling access to that stuff that they're building. But hey, what's a few $100 billion loss between friends, right? Just a rounding error in the grand scheme of curing cancer with chatbots, if that's going to work. And then there's the electricity. I mean, we're talking about data center consuming more power than entire countries, really, when we sum it all up. In Ireland, these data centers that are built in Ireland already account for 20% of their electric consumption right now. And at what point do people start asking, wait a minute, why am I financing AI infrastructure with my electric bill going up double? The sentiment around that could change pretty quickly, right? Why should I pay double just so somebody can generate a cat dressed as a pirate on a whim? The political blowback could be a real party pooper for this global gold rush. So, takeaway, am I telling you to sell the wife, sell the kids, mortgage the house, triple mortgage the house, go all in on data center cooling systems, electric, invent power system, those AI chip cooling systems? Nah. I'm just a guy sitting here like you with a microphone, healthy dose of skepticism. But what I am telling you is while everybody else is chasing these shiny, elusive, big, popping stocks of AI, look at the people selling picks and shovels. They're the ones with real, tangible business that keeps chugging along. They're the ones making tons of money hand over fist, regardless of whether AI is a boom or a bust. Ultimately, they're going to keep printing money. So the prospector's kit for this digital gold rush shouldn't be a pan and a donkey. It should be a portfolio of the companies that are building the foundations of this new world, the ones laying the digital railroad tracks, the ones providing the power, the ones making the whole dang thing not overheat and melt down and turn into a giant blob of silicone paperweight. So do your own research. Don't just take my word. Go check out these companies. When you're looking for the next big thing, don't just look at some shiny AI toy. Look at what makes it tick. Because that's where the real winners might be in this whole thing ultimately. So, anyway. Dun dun dun. Alrighty. Anybody find that helpful, useful, beneficial? Dun 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 dun. Let me start a new poll here. How do we make money today? How do we make money today, right? That's the more important question here. All trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos. If you trade stuff, you might lose money. It's a newsflash to some people. If you desire personal financial advice, hire and consult somebody that can tell you what to do. Golly, the explosion of people. I don't even know how to refer to them. I keep getting linked TikTok videos of people trying to do what I'm doing, teach people how to trade. It's inevitably a sign of the top or a top or getting close to the top when there's young kids essentially out here talking about how easy it is to make money in the market. You just got to buy the momentum. And we saw this in 2021. This 2020, 2021, an explosion of people just, jumping in, going all in, making tons of money. And then 2022 happened and a lot of that all went away. Now we're back to it again. Now we've got all the, 4 years later, bunch of kids jumping in. Never really experienced any kind of downturn in the market. Be careful. See a lot of it. See a lot of people just hyping stuff. This too shall pass. I've seen the cycle too many times now. Be careful out there. Today at 2 o'clock we get FOMC minutes. We'll see exactly how dovish or hawkish they were. Don't really expect any big landslide news here. We've got Fed members speaking leading up into it and after it. And then Powell tomorrow coming in here. We've got the government shutdown ongoing now in day 8. And we shut it down on 1st, so we're on the 8th day, and just keep track of how many days we got. Works till we get to the 31st, right? The Kalshi betting platform, expecting this to last 22 days now. That's up from yesterday. Keeps creeping higher. Yeah, this should be fun, right? At what point do things start breaking? So, yesterday in TMOA, I don't know what TMOA is. You said Bitcoin may peak at 130. How will you know? And so, it's pretty easy. Jump down to the time frame. We get a 5 down and a 3 retrace. And then that would break down below that low. And it kind of confirms that was it. We can fly back in time. Let's see. I need to go back to a place. Let's see. I'm trying to remember. Like, this used to ask for a date to jump back to. Yeah, here we go. And let's see. We need place about 5 times faster. Let's go even faster. Oh, that was cool. All right. That wasn't what I wanted in the replay. Right there is the top. So you don't get a confirmation until it drops on down, but that was your 5 down. That was your 3-wave retrace. And then we broke down below it. So we didn't confirm the last one till we had already lost like 50%. It's pretty violent, right? That's why you got to be prepared. I kind of had this idea that we might top at 60,000 back here. We went just a little higher, but ultimately went on down. Now another chart to watch is this one. It's another indicator. If we break down below here, it's a good indication that this party is done. Just updated with the roadmap line. So another one to watch. If we start breaking down below that, another red flag. The fact that Bitcoin's kind of chugging in here, not really going higher, gives me caution. We're struggling here. This is topping action. Fly back over here. See that? Topping action. Now this wasn't the ultimate top. It did come back up and made the ultimate top and then dropped on out. This was the warning sign, and that was the end. Now, I'm not saying it's going to do that and take, 6 months, 8 months. Every time's been a little different. This one could just top out this time and not look back. So. But we already did that did this over here. We've got that time frame that could be, this could be a little bit different this time, and that's it. So I still expect this to hit the 150, maybe even 170, but it could give it up since so many people are expecting 150. We could come up shy and start the correction early. It's one of those things like Goose talks about this being like a self-fulfilling prophecy of the market. When everybody expects some number, the market usually comes up shy. It just happens a lot on a lot of stocks. So 15 minutes. Dun, dun, dun. So we have this choppy price action with a large move down right here yesterday, coming up into this resistance right here. As long as we're below it, down is the potential. Get above it, 68.10, possibly up to 68.17. That would be the next upside right there. And that move, same size as that move. Probably down around 6,700 for the next move here. Let's put it right there. Yeah. So here's the level 67.27, 67.12, and 66.93. If we get down to that, we bounce, hold below that. That'll be 5 down, and we could be setting up for a bigger correction right there. Dun, 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 dun. Yeah, FCX is probably going to crazy levels here. This potentially was a bounce complete. We got 3-wave right into it. Sets up for that move right there. 89. NQ has the same sort of thing. Same kind of topping action here. First move down, the retrace to 618. Did slightly. So watch out if we glance off of that. We can come down here. If we can break through, coming up here. Small So the risk here is bigger compared to the reward if we go higher. Be careful. Asymmetric. Now, bigger picture, I still kind of expect us to go on higher because we didn't top out Russell yet. Could still move that higher. 2,600 would kind of be expected. And this thing is annoying the crap out of me. I have set that too many times. Save. Oil rallying back up. This is interesting. Overnight, we popped back up and tested this from the bottom. Tested back into here. Gapped up, rallied up, tested that. If we break back below this in the coming days, should take us on down to the low 50s. Now, time frame, this thing's being so slow, it could take us well into the end of the year. You know, the drift off speed here could be even into January. It's just not very fast. Now, usually something happens and it does pick up speed, but that descent, that bleed off rate is just so slow that could take us well out into possibly even next year before this finishes up. We could be out March even. That's why I got to be careful playing the downside here. But once we get down here, things probably get sparky. Gold going for that 4,100. That confluence up there. Then we have 4,300 above that, but watch out, we're going exponential. This is probably doing its final move. Once this corrects, gold is probably coming back down to this area right down in here. A lot of people are like, ain't no way. I'm just telling you, price pattern wise, probably back in this $2,000 area. Right back down here. Once we finish up. And it's, you know, it doesn't matter how high we go here. It's probably coming all the way back down there eventually. So Bitcoin, we're still working on whatever this is right now. That looks like 3 waves down, but it's 3 up. It's 1, 2, 3. So if we hold here below that and we make a lower low, that's a potential 5 down. That's more caution lights. Caution. More caution lights if we break below that low right now on this move. Ether, not much clarity here. This is just back testing. Look at this. Back testing that breakout line. Came up here, right back down. If we can turn it here, that is bullish. Very small little trend, but if we can hold the line here, that's a potentially bullish breakout. My best example of this, in case you've never seen it, best, most clear example of what, you know, it's right here. Broke above, back tested, and then shooting off. Now, trend lines are one of the weakest forms of technical analysis. Got to be careful. See how that was lower high, lower high, lower high, broke through, back tested, and take off. It's a very common reversal. So if Ethereum can hold that, even on the small time frame, smaller time frame, smaller pattern, maybe like, well, it only has two, you know, only takes a couple to make a trend line. Now, trend lines are the weakest form of technical analysis, and so do with that what you will. I don't put giant faith in it, but it is an indicator for me. If we can break through this red zone, it's funny that I drew a big red caution, you know, that we may not be able to push through. So far, that's kind of been the case. If we can break through, upside targets 62.50, possibly up here where a bunch of Confluence hangs out at 7,600. But right now, we haven't been able to get through. I lightened up my load on Ethereum back here. Add a little exposure in here. You know, I lightened up here, add a little exposure here with a lower risk than what I took off the table. Potentially capture this pop above. But is it going to happen? Nothing's guaranteed. And we're continuing to take a little rest on global liquidity. What's in the... Glad everybody enjoyed that. 47 votes. Like 100 people on the stream. 47 people voting. And let's see. Let's do one more poll. Add another poll. Shoot. I don't know what I just did. I hit enter and it did something crazy. There. What do you think? Does Bitcoin make it to 150K? Yes or no? See what everybody says. So Apple probably going to keep grinding in here till something upsets the force. If we upset the force and break out, 276. If we upset the force and break down, get the roadmap line. And if we get below that, bigger downside. It's pretty close. Right there. Amazon. Sitting on the roadmap line, grinding it. Grinding this support. If we hold it, held it so far. If we hold it, break out through this gap down, it's been formidable resistance. That upside target. Sitting up here at 257. Right there. If we reject, watch out below. Google can do a retrace and retest some of this gap up area. Maybe the roadmap line comes up and meets it. But 263 is still upside right there. Meta. And we're down to the roadmap line. If we don't hold it, deeper retrace can take hold. Have a little bit of resistance here. But seems to be a rejection of that 1448 right there. Microsoft. Watch out. We have hit that resistance and stopped. If we take the third move down, that's an absolutely beautiful correction. Target would be right down in here. And if we don't hold that, could take a spill down here. This one's on a different path. This one's further along than most of the others. NVIDIA, kind of same path as Microsoft, but not pulling back at this point, actually pushing out higher highs. 212 on the upside. It's kind of behind Microsoft as far as how high it's come. A 212 upside target. Tesla, disappointing on all their announcements yesterday. FSD 14 came out, but it doesn't have all the features yet. 2 new models of existing model, 2 new, I don't know what you call it, models of models, 2 new editions of existing models, standard editions, low cost, but the social media polls said it, for low cost models, you should have under 35,000, right, 35,000 or lower. And they came in just under 40,000, just under 40K. So wasn't as popular as everybody thought, or maybe as Tesla executives dreamed. So can we pop it? There's $154 million. This is not notional. This is call premium spent. 154 million at 500 strike. People are like, oh, well, there's like 450 strike, 450. I mean, yeah, but the big Mama Jamma sitting there at 500 strike. That's rich. That's a lot of money spent looking for this thing. And you don't, like, 500, it's going to be formidable resistance to get through with that much premium spent there. But at the same time, for those calls to make money, we got to go rip it on through. It's out of the money upside calls. Tons. It's all different dates. It's November, it's December, it's January, it's, next June, next July. So, and they quit making the base model Cybertruck. Nobody was buying that thing. Nobody wanted a high-tech device all stripped out. So it's like you strip all the good stuff out, you should charge like significantly less, like 30% less or something. But no, they just knocked the price down. That would take $100 off, and you got to buy your own tires. Wait a minute. So Netflix coming up for a bounce. Was that the end? That hit the roadmap line. So things to watch. At this point, we did overlap the first move down. So this is starting to look. So 1, 2, 3. That's starting to look like maybe this is done. Now, what we need to see for this to be a real reversal, we need some sort of retrace, a breakthrough the 618 to confirm we're going on higher on Netflix. Now, I can pull all the gainers and decliners and put them on the list. The stuff moving $2 or more up in the pre-market, put it on the gainers list. Stuff moving $2 or more down on the pre-market, put it on the decliners list. And then I have a few setups. So we hunt for some opportunities. PPLT, man, that's getting close to 160. Look at that. If anybody got on this train, congratulations. I said 160 back here, gosh, when early summer, when we started breaking out back in June. Yeah, we're going to make it up here. We could break on through and get up to 200 or possibly even 270. Wild ride. Dell, I look at as a potential AI catch-up trade. Like, what if OpenAI announces a deal with Dell? Dell's going to be our strategic partner. That thing's going to be right up here at the target. Watch the option flows for Dell. NBIS. If you're trying to chase gold right now, you're late to the party. Now is not the time to be getting into gold stuff. That stuff's high, all right? It's already cooked. You're late to the party. You missed it. Just admit it and make a promise to yourself to do better next time. Like, you've got to pick up these opportunities when they're opportunities, not when they're the thing everybody's talking about. SMCI was that example. Like, I told everybody to be freaking careful chasing this. Let me know in the chat if you remember how many times I said, watch out, this is going to retrace. This one's been retracing even in the face of NVIDIA going higher. So, got to be careful. When they're played out, they're played out. I mean, when you're late to the party, just admit it. You're late to the party. Move on. Find something else. This one does concern me that we're cooked. Why? Look back here. We break down. It's another indicator that the party's done. That was the high. We made that high before Bitcoin even topped out here in March. And then made a lower high coming into November here. And then this thing fell out of the bunk bed. Go look at the current. What we got cooking. Same kind of pattern. If this thing breaks down back below this low, party's over. Hate to tell you. This is one to watch. It's got the same pattern, not quite as extreme. Downside's a real possibility. Elf Beauty. Dang. 164, next upside. Palladium. Rock and roll. 138, 142. Through my targets. Let's do a new target. 1212. So this party 181 possibly. If we're gonna turn this bullish. It's a pretty good upside. 50 buck upside. UNH. Let's see what we're doing here. This is going to need a violent retrace. Now, if we can push on through, watch for resistance in here, and then a retrace. But if we reject here, you know, we could push through and then fail back down. Kind of what happened over here. Be careful. Don't necessarily have to have the bottom in place. We came up just shy of where I ideally expected it to bottom. So just be careful. Just because Warren Buffett bought some doesn't mean we were at the bottom yet. This is a prime example. Warren Buffett announced he's buying here, announced he's buying here, announced he's buying here, announced he's buying here. Picking up more and more of this stock, and then it fell on down. It hadn't really gone higher. I mean, there's no return on investment for Warren right there. So just be careful. Oracle of Omaha is not necessarily right every time. Rocket Lab breaking out. Well, good on you. Next resistance levels up around 94 and 100. This one's one that's getting way crazy. I made a bunch of money on it, but be careful. You're sitting at 60 years. 60 years of sales to justify. If anything hiccups in the market, this one's getting liquidated. And Southern Copper. And this one has nice upside potential too. There's a move, there's a move, here's a move. Possibly up to like 300. And, oh, come on. Is it 10 o'clock? Yeah, it is 10 o'clock. I'm going to have to wrap this up here, everybody. Slip through the... I got something else I got to do. Through these really quickly. Here's the setups for today. Fudge. Muffins. That's a bunch of alerts. That's already almost up to the target at 95. ASTH. Here's the high, here's the low, here's the entry, 32. AWK. Here's the high, here's the low, there's the entry, and 150 target. GILD. Here's the high, here's the low, there's the entry, 124 target. Alrighty. Looks like about 70% of people expect Bitcoin to go higher. And I got to jump over to the, I don't know what they call it, opening playbook, I guess, and talk about my new thing we're releasing this weekend, which a new trade just fired off on that sucker a minute ago. See if I can find it really quickly. Cash alerts. Yeah, here it is. Those you that might want to see it. Right there. Buy at 244, sell, sell at 244, buy at 243. Get a net credit about 32 cents. Close target 16 cents. There you go. Have a great day. We'll see you later.